Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best? There is no second best.
Welcome into Discover Crypto in the afternoon, 2 p.m. show. Things are getting dire, folks. The Bitcoin hellscape has widened as we are breaking down to the low $80,000 zone. Things are looking sketchy, and we have a new Federal Reserve chair nominee that's likely to be the next Fed chair from Trump's pick next year. And this guy's background is not all that in a bag of potato chips for crypto. So we're going to look into the details of Kevin Warsh's background today as a potential new Fed chair. Kelly Kellum on the sticks on the co-host spot. How the hell are you doing on this wonderful Monday? It's a beautiful day. Great day to eat delicious barbecue food as the markets go to lows. How are you feeling?
This market is making me thirsty for some bullishness, man. The hopium has all but evaporated. There's red all over the charts. We're seeing the meltdowns. And for those of you that have been tuned in on the weekend videos and also obviously the live streams that we're doing throughout the week, I highlighted this potential breakdown Sunday night. So throw a 1 in chat if you watched that video that I did last night. Or actually, it was yesterday morning, breaking down, yes, bullishness in 2026 is still on my horizon, but I really highlighted the fact that we could be seeing these swings to the downside, and we're getting them. So we shouldn't be left mad because we're not getting what we want right now. We're not getting green. Well, if you want the green to mean something, you got to be buying in the red. The question is, how much lower will this market crash? Because it's looking more and more like we're going to be having a very turbulent holiday season, likely all the way through January. So
Yeah,
we got a lot to cover today, though. So let's hop in.
Well, you know, I want to come to you guys with hopium and love, but there's some nasty stuff on the charts now. Follow me at Druth Crypto. So where you can find all my weekend crash outs, all my cultural crash outs there as well. We were looking for a Santa rally. Instead, we got a Satan rally. Okay, so this is the situation as
Hey. It's the same letters, bro.
It is the same letters, just slightly rearranged. Okay, it's a little bit different than we expected. Thankfully, the quant is provided. Here's some performance from the trading group in our Discord. 80.7% win rate last week in aggregate, a total of 25 trades, and he won 21 of them. We did get the short calls and expected the downward pressure as well this morning. It is nice to have a good bellwether with a trading quant, a professional trader that's given us really, really good insight inside of our Discord. Now, the question you asked is what's on my mind and probably a lot of people in the chat, Kelly. It's really about like how low we go, right? It's been a long time of pain, a long time of fear. I think we're sitting on the longest consecutive fear streak in history for Bitcoin, which is not feeling great. And attention on altcoins is hitting extreme lows. Attention on altcoins and like searches for crypto on Google have hit 5-year lows. And on top of it, Zed is actually dead. Pulp Fiction, the masked actor Peter Green, found dead at 60 inside his New York City apartment. This guy had a great role in Pulp Fiction and in The Mask.
He was in quite a few movies from the 90s, early 2000s. Yeah.
He's a great actor.
Him and Rob Reiner.
Dude. The Rob Reiner stuff, I didn't want to talk about, but Trump's comments on Rob Reiner were not great.
Yeah, I mean, he was
not
completely off the mark with that. Yeah, I mean, sometimes you just need to be, whether it's Charlie Kirk, Rob Reiner, anybody that's not doing harm to people, you need to honor the memory of somebody, not make it about you.
Yeah.
You know?
Yeah, it's pretty weird. A lot of calls for XRP to go to zero. XRP will not make it. We probably should chart out XRP.
Well, hold on a second. Let me ask you this. Even if you hate XRP, do you really want it to go to zero? Because think about that. Think about what happened when Luna went to zero. What did the market do? It absolutely bombastically nuked to the downside. And I don't mean like Mr. Bombastic, simply no, Mr. Bombastic nuke to the downside, not a dance party.
Yeah, and I don't want it to go to zero because of the amount of people that will be destroyed in the process.
Yeah.
Yeah, I mean, even though it's a project that I don't like, I don't want to see millions of people that were sold hopes and dreams of usurping Swift truly done away. Even though I've been up here ranting against it for like years, I've spent that time trying to get people to look beyond it. You know what I mean, Kelly? So like rooting for a zero number, we should probably chart out XRP because I have a feeling that it's probably under the $2 mark right now with all the selling. Benjamin Cowan came out, gave us further warning that he is guessing we may actually sweep the prior low on Bitcoin before any major relief bounce. Now, the prior low being here just about $75,000. It's looking pretty sketchy. God, that was Shaggy that you were referencing there. Shaggy actually had some pretty damn good songs.
Well, yeah, I grew up in Houston, right? And
yeah.
in the mid 90s, we had the three-peat world championship with the Houston Rockets.
Mhm.
And for whatever reason, I mean, I was fairly young at that time, but that song was somehow loosely tied to promotional stuff about those games. And so that song was on those promotions all the time. Mr. Bombastic, simply fantastic. Conversation supernova, Mr. Boom.
It's catchy. And some of the most flamboyant songs, we were talking about it before the show, they have the best hooks.
Oh, dude. Hey, I just met you, bro.
Yeah.
This is crazy. Yo, so here's my number.
Okay.
I'll always sing that. I do want to show you though, because you did talk about XRP there for a moment. XRP has lost that $2 mark, and I haven't drawn any lines on this chart in quite some time. So this is a clear shelf that we're seeing here. If this is lost, then the next line down is the next shelf, which is down here at about $1.63. So are we going to get that? If Bitcoin loses 80, I think we also see XRP down here in the 160s. If Bitcoin and Ethereum find a bottom, above 80, then maybe we get a small wick down below this. But everybody, all eyes are on this. And we've got some stories on this we're going to dive into here together, everybody. But all eyes right now are on the confounding liquidity data. We're getting the Fed. Oh my God, we got the rate cuts. We also have the Fed buying and the Treasury buying, but all the central banks are rolling off their balance sheets. But we're also getting data. But no, we're suppressing data. Everybody's like, bro, sorry for the language. Everybody's like, what the fuck is going on? What am I supposed to do with these? I thought it was supposed to be bullish at some point. That's why I got into crypto.
Well, and I'm seeing some of the first chatters here. Let's see here. Bought at 126K, just sold at 85. I doubt that's real. If it is real, you probably shouldn't come back. If that's why doth Wintermute dump so hard. Shout out to the pops. Now with the dump, it looks like Michael Saylor's had to take up a new profession, serving fries at McDonald's, but Steak and Shake reposted this. If you work at Steak and Shake, we'll pay you in Bitcoin. Not gonna lie, that's pretty badass. I was going to okay, this is a great story, Kelly, just to lift everyone's spirits. So my daughter has been overperforming in school, and she is now part of the gifted and talented section of the school, right? So she's getting all these awards. She's turning into a tutor for other children. It's really great. My son, he forgot to tell me he won an award for reading in his class as well. So both of my kids have all these accolades, and I just dropped everything. Yesterday, I was painting their bathroom, and I was doing all kinds of stuff for the chickens and taking care of everything. And I dropped my tools. I made the kids get their shoes on, and I took them to a bouncy chaos place. You know what I mean? I think it's called Big Air, where they have trampolines everywhere. They have the absolute hoot. And I went up to the counter, and the register guy, he saw my watch. It's a Bitcoin. And he's like, "You're into Bitcoin too?" And I'm like, "You're damn right I'm into Bitcoin." And this guy is putting half of each paycheck into Bitcoin. His mom changed her life with Bitcoin. He's following the path. And when I see people on the outside that understand the upside potential of Bitcoin and what we have to do in the height, like what I see right now, Kelly, over the last weekend, my stagflationary thesis has been confirmed. And hyperinflation is a potential from stagflation, right? So we have to work very aggressively to at least retain our buying power through a hyperinflationary environment, a situation that macroeconomically we're going to cover the data, as you said, later on in the show, Kelly, but we have not been here since the 1930s in the United States, right before World War II entrance, or the 1930s in Germany and what was the Weimar Republic. So we do stand a potential of seeing a near hyperinflationary environment here in the US. That means 20% inflation here in the US. God help the people across the planet that are reliant on the US dollar, because things are about to get very, very ugly. This is why we must think very consciously. And this week has got some really big turbulence ahead of it. So economic experts believe that Japan is going to raise their interest rates. This highlight of a potential wash down to $63,000 isn't impossible, but I'm kind of feeling like it's improbable. I feel that we might be able to hold a little bit above that. And I actually agree with kind of Benjamin Cowan's looking around the 75 mark. But what are you seeing in terms of the charts right now going through this week? Because we have a lot of problems on the docket.
Well, this is from Ted Pillows, and he just highlighted the last 3 rate cuts we saw, rate hikes we saw in Japan. And this is what Bitcoin did. Now, of course, all of these were correlated with something else. In this case, the Bitcoin price went above a new all-time high before the halving. We also got the Japan rate hikes, boom, drop. Here we got Germany selling billions of dollars of Bitcoin, and the Japanese rate hike, bam, to the downside. In this case, we have the run-up of the hype of Trump getting into office, basically getting voted in about over here. The run-up from crypto president and administration. And then on the day of his inauguration, we also hit the high, but we also got a Fed rate cut, boom, 30% down. And here we are yet again. The question is, we're already in the middle of a pretty damn steep downtrend. So everybody's eyes are on trying to figure out, are we going to get another 20 to 30% drop from here? Or is a lot of this already sort of unwound a lot of that Japanese yen carry trade? But then I think on the flip side of that, somebody posted a comment earlier. I'm not going to be able to find it right now, but everybody was so excited about institutions getting in because it was going to pump their bags. And here we are with institutions being able to very easily manipulate the market. And maybe they're not so consciously directly manipulating, but they're able to push the market in ways that trap people emotionally. And then the people like all of you, even me, even Drew, the retail people in this market are falling victim to themselves. They're the biggest manipulators of this market, falling victim to this prolonged period of fear. Yes, let's sell in fear. It's always the worst time to sell. But then again, we have nobody knows what the hell is going on. I think, again, I'm going to say it for the 47th time. I think it's going to take until we get the actual continuing resolution signed, whether it's sometime in the middle of January, end of December, end of January, sometime before January 30th. If we get that, then I think things start to shape up. But if we go into another government shutdown, then all bets are off until we get a conclusion on where the freaking money's going to go in government.
You know, here's the institutions, and honestly, it kind of does look coordinated to me. I think that they mean harm. If I had feelings, they would be hurt right now. So Binance sold 4,000 Bitcoin this morning. Coinbase sold 2,300 Bitcoin. Wintermute sold 1,500. Random Whales sold 10,500. BitMEX sold 7,500 Bitcoin. They all dumped over $2 billion worth of Bitcoin over the span of a few minutes. It was appearingly a coordinated dump, in my opinion. Now, when you look at the chart as well from this morning and from last week, we have these fake run-ups where you think that the market's about to rebound and find some higher supports. It's almost like a Bart Simpson perfection looking
Well,
chart
not
right
only
here. What
that,
you got?
I never realized that Bart had a twin. It's a twin brother there. We got two Barts on that chart. But to that point, I literally just typed this in because I had no idea what the number is to support the question how much market manipulation goes on. Now pull this up because this is crazy. It's nearly impossible to get a single number, but Wall Street firms have paid hundreds of billions of dollars. Hundreds of billions of dollars in fines for misconduct, including market manipulation, like spoofing, rigging benchmarks, and FX rigging, and related offenses since 2008, because Bitcoin was born out of the crisis in 2008, right? So since 2008, there's been hundreds of billions of dollars in fines for market manipulation on traditional markets. You don't think they're going to be doing this in an asset class that doesn't have regulation around it, that doesn't have a Clarity Act, that doesn't have the market structure bill, that does it? Of course they're doing it outside of the laws and the framework that can limit it. So right now it's like, why wouldn't they?
Yeah. And all the, the hopes for market regulation and the bills to be signed, and then we have upside and they'll stop hurting us. I don't think they're going to stop hurting us just because there's some regulation built around it. Like, this is how Wall Street works already. We invited the devil to bed, and this is what we get here in crypto, right? It's sometimes, honestly, Kelly, you mentioned the government shutdown. I hope that they shut down the government for 6 months. I am so tired of this edge job where they want to build this idea that eventually it's going to be okay, but then things keep getting worse and worse and worse. They're hiding some of the most important data to the U.S. economy now. Just tell me one thing. Why do you enjoy hurting me? Oh, Lord. Yeah. And we're going to cover Fannie Mae and Freddie Mac. They are scamming even harder than Wall Street is right now. So we're going to cover that as well. And there's some things in the background that are being done by the U.S. government to steal your Bitcoin from you. So U.S. just unlocked the biggest Bitcoin demand driver in history. This is the way that they word this, so retarded. Congress just introduced the Bitcoin Act for America. Americans will be able to pay their federal taxes at gunpoint in Bitcoin with zero capital gains tax. Every Bitcoin going straight into the National Strategic Reserve, right? And the way that this system is manipulating people, the way that the framework of the Strategic Bitcoin Reserve Act is worded, is exactly the same design as the gold confiscations of the United States right before they went to a gold-backed dollar, which tells me one thing. Well, actually a few things. The government still hates me, and Bitcoin is more sought after than gold, right? Gold is going absolutely ballistic in response to stagflation, but the government in the background is building these in-rails to get Bitcoin out of people's hands. The IRS collects $5.2 trillion a year. Even 5% opt-in is $260 billion in annual Bitcoin inflows. 10% is $520 billion. No ETFs, no mining subsidies, no speculation, no buys, right? The government doesn't have to buy any Bitcoin. They can just force you at a gunpoint in a voluntary manner to pay your Bitcoin to the government. And so this is where it's a crazy time to think about. And you had some insane things coming out of China, didn't you? You were bringing up something about China earlier. Oh, you're muted, brother.
There we go. That's what I'm saying. It's like, it feels like they do these things in a coordinated effort around certain timeframes, because people want to talk about Bitcoin on a 4-year cycle. Well, is China doing things on Bitcoin's halving cycle? Why are they all, again, here we are near a perceived top on a particular time frame. And they also, then again, once again, like we saw the top of last cycle, or the setup for the top of last cycle, shutting down 400,000 mining machines. This is incredible. 31% contraction in network computing power. This is just ridiculous. Fresh enforcement, same thing we saw in November. What was it? May of 2022. December 15th, Kong said an estimated 400,000 mining machines were shut down in a short period. So this is one of those other factors. And then you also have whales starting to take notice. It's not just the mining, it's not just liquidity. You get this confluence of lack of clarity is what's happening in broader markets, not just Bitcoin, but Bitcoin specific. The whales, $100K to $10 million range, actively distributing right now, where we're seeing retail still trying to buy every bit of a dip, with the $0 to $1,000 wallets. The retail's out there trying to bag, basically being exit liquidity for these larger players. And I don't think it's the time yet. It's still as bullish as I am on 2026, the possibility. I've been saying this for some time. There's a very unclear situation right now, which investors do not go risk on in lack of clarity.
Yeah. And the hopes for next year about this new Fed chair, about quantitative easing and all these things, we got to talk about this and kind of rip it apart a little bit. So QE confirmed, but what kind of QE, right? The kind of QE is not the kind of QE that we're kind of hoping for. It's more like this. Central banks are set to continue shrinking their balance sheet even as the Fed ends quantitative tightening. European Central Bank, rumors of them having to increase their interest rates. The Bank of England, Bank of Japan are expected to reduce their balance sheets as well by $1.2 trillion in 2026. This is coming as these runoffs expected to accelerate in European central banks and Japan and nearly offset the pace of the QT, which concluded on December 1st. There's a lot of hopes that this is going to look good. Now they're going to be shrinking their balance sheet even more. Meanwhile, G4 central banks, including the Fed, reduced their total assets by 1.4 trillion in 24 and are expected to reduce this by 1.3 trillion at the end of 2025. So it's a very convoluted mess that these bull posts are highlighting. New Fed chair confirmed. Well, last week we had one Kevin that we liked, Kevin Hassett, but now we're looking down the barrel of Kevin Warsh. Right, Kevin Warsh is now the new favorite on Polymarket to replace Jerome Powell as Federal Reserve chair. And we got to talk about Kevin Warsh's background. Oh yeah, Colin. Yes, I was planning to get Colin. He's a OG of Avalanche. We got to get him on the show. Just so much to cover on the downside and the changes in the Fed. I had to kind of lock in on this, brother. But let's actually dive into Kevin Warsh's background. Let's really take a look at this guy and understand who he is. I think this is going to matter. So buckle up. So he is a Federal Reserve governor, former, that is a critic of overly accommodative monetary policy. He means that he just doesn't like being pushed around by political leadership to decide where the market interest rate should be put to. He has described his independence as something the Fed must actively defend through credible data-driven decisions rather than yielding to external pressures. In the past statements, he has argued that the attempts to inappropriately influence the Fed policy should be met with strong rebukes, and he has advocated for a new accord between the Treasury and the Fed to reinforce these boundaries, echoing the 1951 agreement that solidified the central bank's autonomy. Okay, so this is a guy that historically and through his history has shown to be quite stubborn and wants to press forward an independent Federal Reserve, right? So this is something very, very key to pay attention to. He's a hawkish stance on interest rates, favoring tighter policy to normalize rates and let markets play a larger role. But guess what? This is the crazy part, Kelly. The markets aren't buying the $9 trillion of debt that needs to be refinanced. It's got to be the Fed. There is no.
And to that point, everybody needs to realize everybody still in their mind has this idea of money printing, and they don't realize when the Fed buys government debt, that by nature is money printing, because they're not pulling the money from an account and going and making the purchase. Well, actually they are. But the account that they have that they're pulling money from, they go, what balance do we need? Okay, let's go ahead and edit, paste. And so this is why when you're looking at everything, this is what's going on.
That's right.
This is what's going on. It's not quantitative easing, but it is. And I want you all to realize once you're invested in markets, you appreciate this because you understand that you're in the mechanism that captures this issue. But you also have to morally understand that this is the idea of the K-shaped economy. And if you don't know what that means, people that are investing are always doing better. People that are not are only getting worse. So this, while we all are expecting and we want the Fed to, the quantitative easing, we roll on the balance sheet. Sorry, this is a bad language show. It fucks the ability for people to buy things, to save dollars, it literally makes everything more expensive. In fact, I have something here I wanted to show you. Where is it at? Where did don't tell me I closed it out. I closed it out. Dang it. Hold on one second. I got it here.
I'll let you search for it. I got a question in the chat. Someone's looking for the shoulder rig. Oh, here. What you got?
This is since 2000. Look at this. This is just in the last 25 years. Your purchasing power of $1. We can fast forward this, and I just want you to see, since 2000, you've lost nearly half the buying power of your dollar. Since 2000. So most of you here, I'm guessing, are about 25 or older. In fact, I can see the demographic data. Most of you are about 34 to 45. That's the highest age range demographic we have. We have some people in the 20s, but in the last 25 years, half the purchasing power. So when we look at things, we realize, yes, we do want quantitative easing. If we're invested in markets, you also have to realize it's a double-edged sword because it only drives the issue further, where it's only going to serve more and more civil unrest until ultimate some sort of catastrophic failure of culture, of people. And why do you think there's so many people reveling to the streets right now? Everybody's searching for something to rally behind because they can't afford a damn thing.
Absolutely. And that's where I vent on the Blockchain Basement about those cultural degradations, civil unrest, things of that nature. Philip Pastula is looking for this. So here is this is a great brand. It's Gould and Goodrich. Excellent.
That's a good name too.
It's a great name.
That sounds like they've been around since 1871.
Yeah. So this is where, and for the content of, how society degrades, if it keeps going, then it's going to get much worse. And, right now, the risk off attitude, it's shown on the gold chart more than anything, right? We just look at this. So we're at $4,300 per ounce on gold. Now, what matters about this gold chart is the historic performance of gold in the face of a market that is locking up, that is seizing. Now, gold, in the movement where mortgages went up to 18, 20%, because 1979 to 1980 is the real kind of blow off top for gold. And this is where markets hit a hardcore level of stagflation. Inflation went nuts, and there was political pressure on the federal chair to lower interest rates into that inflationary environment, which caused a blow off top for gold, but then a 20-year bear market for gold as well, until they released the gold spot ETF here in around 2004. So this situation that we're in right now is showing me a potential for inflation to get near 20% again. And this is why it is very important to pay attention to these markets. Now, in the light of Bitcoin, Kelly, I admit this. Chat, I admit this. Bitcoin has never seen the U.S. market hit stagflation. Gold has. Gold's an old man. Bitcoin is a 13, 14-year-old kid in monetary terms compared to gold. But in March of 2020, when they told us everything was ending, Bitcoin performed very, very well in that environment. And we have something else going for us in Bitcoin, which is the digital flow of payments and the digital flow of energy captured, right? Something that the NVIDIA CEO Jensen was talking about last week. It's where you can capture the energy spent, its monetary value in Bitcoin, and move it from point A to point B. So these are brand new dynamics to money. These are brand new versions of the economy. And I actually think Bitcoin's got a damn good chance at performing extremely well in this blow off top hyperinflationary environment, because it is proof of energy spent. It is proof of work. So when that happens, we are entering that zone. Gold has an interesting path going on for it right now, Kelly, but I'd love to see if you could chart out gold to see when the blow off top might at least come to a cooling point. What do you think about that?
I don't know if it's coming anytime soon. I mean, it's amazing to watch what gold is doing. To give you context, this would be the beginning of 2025, right where my mouse is right here. Let me put a come on. Let me put a line there. That'd be New Year's Eve. So this is 2025. 2025, we've seen almost a 70% increase up to this high to where we're at right now. We're just below that, about 65%. But this went into a large sort of kind of a bull flag here. You know, when you see it stretched out, you don't notice it. But look at this beautiful bull pennant. And this target, which I drew months ago, has almost fully realized. I mean, this has come up just below it. I expect this will likely keep on going because it's not like the concerns about debt, the concerns of money printing, the concerns of all the things that we say for Bitcoin is also true in terms of a hedge of those issues when you look at gold, except gold also has the majority of the world having an understanding of it being a tried and true store of value. So now I can make all the arguments why Bitcoin is likely a much better store, but the truth is the masses are behind gold right now. I mean, I didn't think we were going to see lines of people lined up out the store around the block, buying gold from gold distributors like we saw only a few months ago. And yet that was right here at the peak. That's when those lines were. And it tells you physically the story of retail aping in at highs. A lot of those people sold on the drop because they were mad. And now we see this coming right back up. Gold is shaking people out just like Bitcoin. Silver is also on a really nice run up right now. But I think this is going to be the story for now because there's not real clarity. It feels like, and I don't mean this as a political statement. I mean this as you look at the news, you look at the social media, you look at the changing of the guard, if you will. It feels like we're in the middle of a real turning on the global stage, not just Trump being in office. It feels like there's a change and a friction in culture and power between banks, between technology, between governments, between media, all these things coming to a crux at the same time. So it makes sense that people are kind of fleeing to gold right now. And the question is going to be, is there going to be a rotation into Bitcoin? Another thing that I've heard recently also about Bitcoin is there is a huge amount of trillions of dollars in Bitcoin. And everybody's looking for this sort of follow-on correlation with a lot of other assets, blindly thinking because it's newer, it's following the path of other assets, whether it's gold up or S&P down, so on and so forth, whatever it is. The flip argument of that is Bitcoin is likely just a lot more sensitive and basically being utilized as a liquidity mechanism that is actually front running what is going to happen in broader markets outside of gold, like stock market, tech market, what we're seeing in those phases. So it's anybody's guess right now. But one thing is true. There's going to be more money printing. There's going to be more issue. There's going to be more devaluation. So the question is, how patient can you be with your stores of value, whether it's gold, whether it's silver, whether it's copper, whether it is Bitcoin? But I do think that this is going to be a story of up and to the right over the rest of our life with dips along the way.
Yeah. Now I love proof of work concepts, Bitcoin being the main one. I do want to look at this comment from Bartizan. There's a desert industrial initiative that's trying to capture some green energy. There's a lot of energy lost in the green energy movement. That'd be very, very interesting. I'll check that out. Absolutely. And, this gold chart that you showed here, Kelly, it's terrifying how closely that resembles this. I mean, it really is quite concerning that, the kind of similarities there. So I'll kind of just measure this move. Let's see here. So we had this, bam. I just want to see how this kind of matches up. God, this thing just went insanely parabolic. Like
what date range is that?
So this is 1979 December, right? And from that pennant breakout, it continued by 119%. So I mean, like it's a much larger market cap now. So like this is kind of hyperbole, but let's just look what 119% from this current bull flag would look like. Let's see. Holy shit. Okay. This is going it's going way up here. Like I said, it's a much larger asset class, but the problem at hand is also pretty large. So I mean that would mean gold keeps going to $7,300. That's hyperinflation right there. Like we do not want to see that completely play out the same way that it did.
Oh, Dave Weisberger said today on Scott Melker's show, and it was such a great point. And I've made allusions to this. I've alluded to this, not illusions. I've alluded to this as of late. Also, we've had about half the money that's ever existed printed in the last 6 years, and somehow we're so impatient to think, well, the money's printed, so the effect on the markets is already in the markets. No, we've had half the money that's ever existed printed in the last 5 or 6 years. And so we're still seeing these things find their way into the stock market that absolutely boomed. But then what do? People rotate profits out of one asset that's performed incredibly into something, that's a little bit safer longer term, that's going to store that value. So gold's price is also likely seeing this boom because it's still catching up to the mass printing that we only saw in the last 5 or 6 years. So on the one hand, no, it's the masters running to it because they're scared. On the other hand, you can also explain some of it or understand some of it by nature of so much has happened in such a compressed amount of time that we're seeing what feels like exaggerated moves on charts, but it's just so much has happened in such a small amount of time. It's starting to manifest itself also in what looks like a parabola, but it's also just a relationship with how much has happened recently in the global financial markets.
Absolutely. And really, gold's reaction in the 79.80 moment is looks tiny compared to our current situation. And some other things got me real queasy today, Kelly. It's this. Fannie Mae and Freddie Mac are cutting back on the information that they're publishing about the housing market in the United States. This is a $120 trillion industry. Now, the average price of a house, around $450,000. A lot of expectations that housing prices would come back down have been squashed, and average housing prices in a lot of different demographics are actually going up. You have a bunch of different factors going into that, but Fannie Mae and Freddie Mac are not hiding information because the information is good, in my humble opinion. They're hiding it because the situation is dire. One interesting thing that I did see today as well on the macroeconomic side is copper is being slated to soar to the stratosphere, according to the Wall Street Journal, and a couple other, larger publications here. They're talking about a massive upswing in copper prices. You had some information. You'd said you were looking at kind of the correlation between Bitcoin and copper, Kelly. We could check that out.
We need a little bit of hope, right? We need some hope because because we're seeing a downtrend on the 4 hour, the 1 week, the last 168 days or something, we've been in a downtrend. There's still, again, I'm still bullish on 2026. And if you look at this, we've been talking about the business cycle. We've been talking about gold. We've been talking about Bitcoin. If you look at this relationship right here, this purple line is basically copper's price relative to gold. Copper's price is increasing or gold is dropping, right? It's kind of like when you look at the Bitcoin dominance compared to altcoins. And then in this case, this is gold really having its run, really performing well, and copper not moving as well. But you've seen this correlated bottoming of this ratio before major moves in risk assets, bottoming before this major parabola in Bitcoin, a risk asset. Same thing again. And here we are again in the same territory that has preceded the major moves. So on the one hand, the picture is painted very gloom for what we're seeing in the immediate term, which is why the lack of clarity, we're seeing it reflected in the lack of certainty in bulls in Bitcoin and the altcoin market. However, we're seeing the conditions between gold and silver and copper and the business cycles and what the expectations are for more and more money printing next year. And there are pretty strong indications that the move everybody thinks is completely over just hasn't really happened yet.
This is a very interesting. So this is the copper and gold ratio in purple. And I mean, that is hitting extreme lows. Is there any it looks like it's just actually making new low after new low on that. So how low can this really go, Kelly? If they're thinking copper is going to expand, do you think that we're going to see an expansion because of that ratio of copper? Like, is there any upside, do you think, or are we just kind of in for pain? Because like copper going up gives me the inclination that business activity is ready to ramp up as well.
Well, here we go. Bitcoin's major bull market runs have often aligned with rising copper gold ratios. That's that purple line we're just looking at. It has to do with economic expansion. And why would that be? Because remember, you go back to the gold chart and gold, let's zoom out on that. Daily boom. The gold chart has just been going up and to the right. But this is this period of uncertainty that we've been facing in the market. But everybody goes, but the stock market's been booming. Well, has it? If you separate out the Mag 7, all these major tech industries that are also very aligned with AI, those sectors have been going absolutely astronomical. But the rest of the market is not really doing nearly as good as what we're seeing with the tech industry, which is the majority. They have the lion's share, the largest percentage stakes of the S&P 500 and other stock markets out there. So with economy not doing good, projections of uncertainty, flood to gold, let's protect ourselves. So when you start seeing people flood, I don't want to say flood back out, but start to exit gold and go back into risk, it's also an indication that, okay, we're getting a little bit more certainty about what's coming in the economy and in the market. We're a little more certain we could take a little bit more risk. So you see copper go up. You see other uncorrelated assets really starting to expand because risk is coming back in, because certainty is there to allow you to take risk.
Yeah. And someone's mentioning silver being kind of like the altcoin compared to gold, and silver's kind of delayed new all-time highs. Silver's also exploding up. And you mentioned some clarity at the front end of the show here for crypto. I'm seeing this from Eleanor Tourette. There's a crypto task force meeting, a roundtable going on today with some pretty big names on it. You got SEC Chairman Paul Atkins, who's pro crypto. That's great. SEC Commissioner Ueda and Hester Peirce. These are very, very friendly names to crypto, I would say. Now, this type of regulatory framework being finally set up, it doesn't give me some hope of massive upside, but I'm seeing some altcoin names like the Zoko Wilcox founder of Zcash is going to this, Aleo Network. We also have Spruce ID, Wayne Chang. This whole altcoin sector, it feels like, I've said this for a while, and it's sadly playing out. It's an extremely selective altcoin season, and there's a lot of old altcoins that literally never had a euphoric moment this last few years, right? And so there's a lot of confusion on if people should be holding them. Me, I got into some Solana DeFi, like Marinade, Camino, Jito. They just keep finding new lows. I still have a decent amount of money in them, but they were like 1% of the portfolio plays. I'm almost feeling like just rolling them back into Bitcoin and then keeping it extremely tight moving forward. Like, Kelly, do you think that any of this regulatory framework is actually going to pump our bags? Like, because it feels like the more we get this, we're here to stay type conversation, it doesn't matter. The markets keep dumping into, this macroeconomic shitstorm that's going on.
I don't think it's going. I think it'll cause a very short-term pump, like in the immediacy of it happening. I think it will be, it's hard to measure it post, after that, because I think what's going to happen in my mind, what would likely happen is you start getting a lot more aggressive stances and action plans and real integrations and moves, not only from investment, but also development and integrations from major players, institutions, banks. On the one hand, those that I would rather not be involved in the industry. On the other hand, those that are going to create the very simplistic ease of use that the everyday man, the masses, are probably more likely than not going to find their way to adoption of Bitcoin and crypto of some form or a proxy of it. So I do think it's going to be bullish, but I don't think it's the immediate boom when it happens, unless we see everybody's been waiting on the sidelines, ready to pull the trigger until this happens, and then you just see a flood of capital within the next 3 months. Because remember, when the ETFs went live, here's what happened. When the ETFs went live, they got approved on January 10th, 2023. They went live, 2024, sorry. They went live on January 11th, the next day. And so that was bullish, but the market sold off for about 12 or 14 days. We crashed after these massive pools came in. But then we went on to boom, not only in terms of price action, massive boom in price action when that happened. However, the data that was most important was data and aggregate numbers that quants look at, that really, really financially sound individuals, they're looking at a lot of data to look at, and they realize, is there going to be any interest? And then 3 months in, not only did Bitcoin, not just BlackRock, but Fidelity, BlackRock and Fidelity, two different independent ETFs for Bitcoin, broke every record that's ever existed for ETFs. So that was one metric. It's like, oh, there's a lot of appetite for this. But then you also saw a massive amount. It was like a 10x within that 3-month period of the number of institutions that were piling in and buying exposure to Bitcoin through these ETFs. So that's the kind of thing I'm looking at with the market structure bill and the Market Clarity Act. One, I'd like to see a little bit less market manipulation, a little bit more stringent on that ability. But two, more freedom and lack of worry of prosecution from government if they were to get involved in how those things are handled.
And one thing that I wish would be done is stop allowing these organizations to buy OTC, because they buy the Bitcoin. We have this giga bullish accumulation from Saylor and all these huge organizations, but the price doesn't go up. It just goes down, and the excitement for me comes to potentially being able to get good projects cheaper. Solana, shooting from the hip. It'd be nice if I could see $80 Solana. I'm seeing this bullish news that makes very little hope. I'm not seeing much excitement. I've looked at Ondo last week. I was trying to snoop around for a bull case on the internal DeFi Llama data. It's still there listed as one of the big ones from RWA.XYZ and BlackRock's Biddle Fund, but the move and tokenizing stocks and ETFs on Solana, the winner here is Solana. If I'm looking at the picture, Ondo and Solana, I'm looking at long-term for Solana, and I am kind of hopeful that I can get Solana for $80. If the pain continues, that's something that I would be moving
we were
into.
talking about that just before we went live. We were looking at Solana's chart. It's already swung down. This is at 5-year trend line, I believe. Yeah, coming all the way back to 2021. Rejection, support, rejection, support. We sliced right through it. Boom. And came where? I've had this box on here since I don't even know how long. And this is back into the zone of interest. A lot of support and rejections at the zone. If Solana loses this, remember, we're seeing Paul Atkins, the chairman of the CFTC, saying in 2 years, everybody thinks there's going to be a bear market over the next year and a half or something. Right. He just said in the next 2 years, every stock's going to be tokenized. Well, we already know Solana is integrated with Wall Street. They've got internet capital markets that they had the banner on the front of the stock exchange like a month ago. Right. Ondo's integrating with them. So that means they've got the nod from BlackRock and WisdomTree and MasterCard. And the list is just ridiculous. And so if I see this, and it's like, why isn't Solana going up? I'm like, thank God it isn't, because as frustrating as it is, if you believe in an asset class and you see stress here, this is retail being frustrated. The smart money's going, go lower, motherfucker. Go lower.
I know.
I want you to come down here. Here's 100. And then the next level down, boom, into the $75 to $85 region. And that's the level I think would be super interesting to start really getting some nice stacks.
Oh my God, Kelly. Yes. IMG sold my Solana XRP and bought a new vehicle and paid some debt. At least you took something. That's why I don't feel very worried at all. Maybe I should feel more worried, but it's like I consistently, when I see a 3 or 5x, I'm taking that money. You know what I mean? I'll leave some moon bag behind in case I'm wrong for selling and it goes to the moon and that's the next Bitcoin. Fine. But at large, I feel excited and hopeful for lower prices. If that sounds weird, it is how I feel, because it would be great if I get the opportunity to buy Bitcoin anywhere near 50 grand or 60 grand. $1,000 would be getting me near 2% of a Bitcoin. That's incredible. I can stack some serious Bitcoin at that level. So I am sitting on some tether that I'm not going to use unless we do tap that $65,000 region. But is 65 too much of a copium for me do you think, like on Bitcoin? Like, because I know Benjamin Cowan at the front end, he was saying we could sweep the 75 mark. You know,
Well, I mean, interestingly, look, so I have this. This is just here. This is the previous range tops, the 64, 69. Drew this out. This is where we had all the chop projection. If I extend this out, let's just take a look. Boom. What would that be? 63 to 69. So that's where the meat of all of these huge shelves are. So two things would be accomplished if that happened. If the price action did that, you'd see the move come down, really people really capitulating. In my opinion, if we came down into this zone, it'd probably be relatively quick. We'd have to spend some time, and then we'd be making our swing to the upside. Now, this isn't to scale, but this would really bear trap people if this lost this $74,000 region, which is the previous range high, right? And this bounce right here. If we swept that, that would be the ultimate trap, I think, before it made its move to the upside.
yeah. If I see it there, I mean, I'm sitting on some tether that's not going to move unless I get that entry point, you know. And there are, like, it's been uncomfortable for me to come out and say it's going to be a selective alt season, if any at all. And honestly, that's been exactly what we've seen. And there's been a lot of projects that the bodies are floating up to the top of the river from the October 10th washout.
Well, you know, to that point, Pat McCrotch earlier said, when doth Wintermute stop selling? Or why doth they sell so much? There's some speculation that there might be some stress in their business model because of what happened on October 10th. So they may be still trying to sort of, you know, cover positions.
They sold $1 billion
business, right?
Right.
Yeah,
that's an interesting thing to think about. Maybe one of the manipulators is gone, hopefully. But I do want to talk about something pretty uncomfortable. And this is just, you know, some food for thought. This is from Crypto Daddy. This is the post no one wants to read. Here it goes. We got royally. Alt season will never occur again. Money will concentrate into a few select alts from here on out, with an occasional Billy runner here and there. There will never be another rising tides rally where everything pumps, ever. He feels this way. Make me the bad guy and then off. So he's feeling pretty salty, but honestly, like, the idea that all ships rise with the tide was something I had and I was hopeful for in 2024. And I felt like a total idiot for selling giant bags of alts. I did buy low, and then they did like a 3 and a 5x. One of them did like a 10x, and I sold them. And we were at the time in the mindset that this market was going to rise like it had in the past. And that simply has not been the case. And my feelings of regret for being a fool have transformed into, holy God, my wife times the top again on my assets. You know what I mean? And shout out to her. I took her out to we went out to a Christmas party. She mocked the entire room. I'm a lucky guy. It was an incredible time. I am very thankful that, you know, her insight on when to sell comes in my life, because otherwise I would have been a hopeful romantic looking for this insane rally on altcoins that hasn't really happened again. But it really is a time frame where cheaper Bitcoin excites me. Yeah, there she is.
Look at this handsome devil.
Oh my God.
Woman.
Dude, she literally is getting hit up by model agencies now because she went out all dolled up. You know what I mean? So she was a model back in Colorado, so she's probably going to get into it again. Shout out to you, Tia. Has she called a bottom? No, she has not called a bottom. And really, you know, the look of nuclear energy investments look very strong. Tesla
drew a top though.
Yeah, I'm always the top. But she has not called the bottom for Bitcoin. You know, originally what she was saying was the same shit of what I'm hopeful for right now, of a $65,000-$70,000 plate check on Bitcoin would likely be pretty short-lived. And that's where I back up the truck once again. I have a very simple plan in Bitcoin where once you breach slightly below the energy cost of Bitcoin, you sell or everything that you can to get money to buy Bitcoin, and you use the tether you have to buy Bitcoin, you back up the truck when you get to that zone. It's just about being prepared to do so. But yeah, having a price oracle on my side, plus the quant in the Discord with the daily calls on trades has been pretty. You were doing some great trades this morning. It sounded like I heard you hollering from your office there. What were you trading this morning, Kelly?
ETH.
ETH?
I was catching the swings to the downside.
Okay.
Super quick. Like I was looking for setups and then just taking everything just felt so bearish. And I made this call Sunday night on the Sunday night video for those of you that Sunday day video that if you watched it. And I was looking at it. And so I just saw the setups and I was being super irresponsible, super aggressive, 50x, but $1,000 trades on 50x. As soon as it would pop down and I was up about 16 to 18%, I'd take profits and it would kind of rebound and do some stuff. And then I'd look for another setup and I took another one, get 16. I think the next one I got was 22%. Then I got out. So I wasn't chasing. I want more. That's what screws people in the market. You see a trade, you take it, it pops. You're like, yes. And then you're like, oh, I think it's going to go to this target. You don't get out. And then it just reverses. And where you were up 15, 20, 30%, now you're underwater and you're mad at yourself. So you want it to go back up so you don't get out. That's what really messes with it. Throw a 1 in chat if that's ever happened to you. You were in, it was in profit, and then it reversed. And you're like, what the? Yeah.
Like how I do it because I'm hosting shows is I'll put an entry point in. And I don't like staring at them because I got to do all the research and stuff. So once it goes my way more often than not, I'll just put the stop loss at entry point. So if it washes out, I don't lose anything. If it goes my way, there you go. So, and I'll talk about, I see some good questions in the chat. So where's our energy cost? Is it basically previous 2021 all-time highs? Let's take a gander here, brother. God, what a gal. All right. So the energy cost of Bitcoin is at $74,000. I'll just draw it out right here. Just about $74,000. And this is actually should be green because that's a good thing if we do go down to the zone. And the punch down below energy cost is actually something we did last bull market or bear market rather. So if I could get 10% below the cost of Bitcoin to produce, I'm killing it. And this is how I did it last time. I left a line at the previous market high of $19,500 on Bitcoin. And when we fell down to this zone, I did slight DCA in this zone here, but got extremely aggressive when we fell below the cost to produce. The cost to produce Bitcoin at this time frame was $19,000 as well. So when we dropped below the price to produce, we dropped below by about 18%. Yeah, about 18, 20%. That's when I knew to really, really put the pedal to the metal. And it helps me out a lot because, taking profits, you have less crypto. You have not the giant bags that you go through bull markets with after you sell, right? So you have to rebuild your portfolio. And this was just the very basic hillbilly TA movement that I've done a few times. And if I do get so lucky to get below the cost to produce a Bitcoin in this long-term environment for Bitcoin,
dude, isn't that bizarre? Isn't that bizarre? Doesn't it make you feel like we're living in a simulation?
It does.
How the hell is the cost to produce Bitcoin somehow roughly around some arbitrary price of a speculative asset like Bitcoin that went up to about 69,000 and now the cost to produce a Bitcoin is about 69,000.
It's nuts.
Like, come on.
That's the situation at hand though, so if I do get lucky enough to get that zone, I'm going to be absolutely backing up. And then Pat McCrouch is asking, how in the world do I have Tether to be able to buy Bitcoin? It's from the trading quant, right? Because my heart is bullish. He's been printing a lot of shorts. We've been making new money, new Tether with those trades. Now, I haven't gotten on the DeFi action because I've been so busy with everything else. But I plan to keep my aerodrome and keep my morpho, and I want to start earning more of those things, especially if we do enter a nasty bear market and attention really leaves Aerodrome and Morpho, I'm going to stack those things to the ceiling. So my selection on alts is very specific. I'm not out there going to be grabbing everything. But you know, there are a couple altcoins in my mind that I would be stacking. So that's kind of my general game plan. I really hope that through all of this, we can find solace in the fact that we know that data is the new oil, that this economy has now moved digital. Communication has moved digital. The government wants your Bitcoin through paying your taxes in Bitcoin. They want to seize Bitcoin, and they have a clear intention on building a Bitcoin strategic reserve. This is set up for the 1930s, where they went and confiscated gold before they went to a gold-backed dollar. Now, what we're going to probably see in the light of this hyperinflationary potential over the course of the next few years and this disgusting gold chart is a move to a Bitcoin reserve and a Bitcoin-backed dollar. So if I can get cheaper Bitcoin, I'm buying that cheaper Bitcoin. I'm going to stay trading. I'm going to get involved with DeFi and make sure to check out DeFi Crypto and Airdrops. We got him in the chat here somewhere, and we got a super chat. Check it out. It's all tied to real world energy cost and cost more to mine less. Exactly. This is things that we really, really need to think about as we move forward. It's going to get ugly. Kelly, I really appreciate you being on the show. There's a lot of fear in this market. What is your game plan if we go to 65K?
I mean, patience, stacking, reminding myself why I'm in this and the case for this asset class and the displacement of old antiquated systems. That this, you know, not just Bitcoin, but Solana and Ethereum and smart contracts and the tokenization, and remembering why we're here. You know, if you're here to make money and the market's going down, it doesn't mean you messed up. It might mean that you're being impatient on the time frame for which you expected it to happen. That and being on here and talking with you every day and hanging out with the dog over here looking at me like, dude, what the hell are you doing? I'm working, dude. And you know why? Because we got to keep our mind and our wits about us and still be patient, still be faithful to gratitude in our lives and realize what we have. And the fact that whether it's $1 a week, $5 a week, $10 a week, $10,000 a week, everybody's on a different economic strata. Don't beat yourself up because you're not where you expected you were supposed to be. You weren't supposed to be anywhere. That's the thing. Remember that. You are carving your path, and life is like, whether it's God or the path that you find yourself on, you know, faith and gratitude and God and all these things. And it's like having a GPS in your life. If you're in a car and you have GPS and you take a wrong turn, the GPS doesn't stop working. It just recalculates and says, this is now your quickest path to get to your destination. So when you fall off your path, when you make an error, when you make a stupid trade, if you spend money on something stupid and afterwards you're like that, realize, just don't beat yourself up and get further off the path by beating yourself up. Just go, oh, how do I get back to my path? And get back on the path, get to your destination.
Absolutely. Well, we're on the precipice of the great unknown, folks. The one thing I know for sure is that the government wants your Bitcoin. Make sure to use a cold storage device, hold long term, and hold on for dear.
We just wanted to take a quick second to shout out our sponsor, Arculus. They are a cold storage hardware wallet, helps you secure all of your digital assets for the future. Just tap this thing to the back of your phone and boom, you're in. We wouldn't be able to do this without them, but also wouldn't be able to do this without you guys, the Disco fam. You've supported us a lot over the years. If you want to support the channel now, just use the code DC20. It gets you 20% off this card. It's the #1 way you can support this channel going forward. Thank you for your support. We'll see you at the top.